Good morning and hello. It's me, Kenny Polcari, and this is your morning market commentary. It is Tuesday, August 24th, and what's going on? So much happening. Stocks rallied hard yesterday. What is happening? Well, Pfizer-BioNTech got the full FDA approval, and that's causing investors to celebrate, right? Economic data was mixed. PMI is suggesting maybe some weakness, and that's causing people to speculate that maybe the Fed does nothing. Pelosi failing to advance her $3.5 trillion spending package, and she's not happy about it, but she's going to try again today. Expect there's going to be hell to pay if any of her members don't fall in line. Oil, which has been under pressure and way overdone, surged by 5.5% yesterday, and it's up again this morning in a quick snapback move. And what are we having for dinner tonight? We're going to try the Simple Baby back ribs. They are so delicious, simple to make, and they're perfect on a summer evening. So bam, stocks exploded higher as investors considered what the FDA move really means for both Pfizer and for the country. Remember that the FDA gave Pfizer-BioNTech complete approval, official approval for the COVID vaccine. And now the Pfizer CEO even telling us that they're already attempting to manufacture a vaccine for the Delta variant specifically, which I'm not sure what I really think about that. You know, let's see, but there's too many vaccines running around here, in my opinion, but let's see. They're also now convinced that we're not going to hear anything new out of Jay Powell at Jackson Hole this week, right? He's apparently expected to repeat exactly what he's been saying all along, and that is, yes, we're making progress, and no, we're not there yet, and that demands that we maintain the status quo and continue to buy $120 billion worth of bonds month in and month out until at least November, December. Yesterday's economic data, though, was a mixed bag, right? Existing home sales were up a solid 2% versus the expectation they were going to be down 0.5%, while both manufacturing and services PMIs were just a tad weaker than what the estimate was, and that's suggesting maybe that the variant is taking a toll on the economy. At least that's what fits the narrative, so that's what they're going to run with. And just to give you a global view, recent international data shows that Australia is showing a contraction in activity, but look, they're locked down again. While numbers out of Japan and the Eurozone came in a bit weaker, but that's kind of expected with the variant. They're not locked down, but it's kind of expected as the variant has kind of wreaked a little bit of havoc, but that seems to be maybe changing. So the sense is that we have some room to run before the Fed takes their foot off the gas pedal. And especially if Nancy Pelosi cannot get the $3.5 trillion human infrastructure bill done, then in fact, she has failed, and she's not happy about it because this group of centrist Democrats are failing to join in and advance this massive stimulus bill yesterday. And so they're going to try to resume talks today to see if she can convince the holdouts to fall in line or else. Expect Pelosi's going to threaten a hailstorm on any Democrat that refuses to sign on. In the end, I don't believe that the $3.5 trillion is going to pass. And that's going to put pressure on the Fed to keep his foot on the gas pedal as well. Because there's been all this speculation about the stimulus bill passing and what it's going to do for the economy. Yeah, but then you say, wait, slow down, but the Delta variant's another reason for caution. I would point out that while that's true for now, there does appear to be good news just over the next mountain range. What am I talking about? Yesterday, Bloomberg LP reported that the Delta variant is declining in the most hard-hit states, right? It began in Arkansas, then moved on to the Ozarks in Missouri in early June, and then it moved into Florida and Louisiana 2 months later, where the surge has lasted 58 days before it started to roll over and decline. The wave that then hit the rest of the country turned 60 days old yesterday, which might suggest that, it's about to wane as well. This article goes on to say, and it's interesting, effective reproduction numbers, which is the estimate of the average number of people to whom an infected person will spread the virus, is declining in most states, according to the Yale School of Public Health, the Harvard T.H. Chan School of Public Health, and the Stanford University School of Medicine. Right? 3 fairly substantial institutions, right? All finding this, and it's supported by the CDC. Numbers below 1 signal that the cases are expected to fall soon. 22 states are already below that level, while the majority of the other 28 states are between 1 and 1.2, but trending lower. And it's funny because when I posted this story on Twitter yesterday, the reaction was immediate and visceral. They hit me with all kinds of insults and data proving that the cases in Florida and other red states are still high. Well, apparently they missed the story. And what the authors, supported by the CDC, said in that story, right? And the key sentence is that cases have started to decline, which isn't to say that they're not high or that it's gone. All it said is that the data shows the surge is starting to decline. And what the visceral reaction tells me is that apparently people don't understand what they read, right? I didn't say that cases ended or cases are over. They're turning the corner and starting to go lower again, right? So it's good news, no? Are we willing to acknowledge that just maybe the threat is retreating and that the worst might be over and that as more people get vaccinated or establish natural immunity? Do we want to continue to accentuate the negatives? Investors are not accentuating the negatives at all. In fact, quite the opposite, just FYI. Did you see what they did to stocks yesterday? All new highs. And we should celebrate this news, and that's exactly what investors did. They celebrated, they bought stocks with reckless abandon. By the end of the day, the Dow had added another 250 points, 15 points or 0.6%. The S&P up another 38 or 0.8%. The Nasdaq up 228, 1.5%. The Russell up 41 points or 1.8%, while the transfer gained 1%, adding 137 points. Now look, if there's any sign that the U.S. economy is slowing at all, you can be sure that the Fed will not announce a taper. Remember, they've already laid out the plan. They've already laid out the pathway. We know what the plan is. We know that the conversation is underway. They just have not implemented it in the sense that they still won't implement it until they are absolutely convinced that we are past the worst of it. I'm not sure you ever really know that, right? But the 10-year Treasury rose yesterday afternoon by the end of the day, just a tiny bit to end the day yielding 1.26%. The VIX fell another 7%. That's no surprise considering what the market did. Ending the day at 1730, once again complacent. The dollar index fell by 0.5% yesterday, and that gave life to the commodity complex. Oil benefiting from that move, but also benefiting from a way oversold condition. Oil rallied 5.5% or $3.40 a barrel to end the day at 66.38. And this morning, oil is up again, rising another 1%. Gold also benefited from the weaker dollar as well as an oversold condition, right? It rose 1.3% to end the day at 1806. It's now fighting both the 100 and 200-day moving average trend lines converging right at about 1815. So this is going to be key. A push up and through 1815 successfully is going to see gold spike to 1900 very quickly. This morning, U.S. futures are up again, but they're beginning to feel a bit tired. The Dow's up 37 points, the S&Ps are up 6, the Nasdaq's up about 40, and the Russell's ahead by 2 points. Nothing dramatic. They are higher, but nothing really dramatic. The economic data today includes Richmond Fed survey and new home sales, both expected to show strength. So that's a positive, right? More speculation about what to expect from the Fed and the summit on Thursday, Friday, and Saturday is going to be at the top of the agenda, as you would expect. European markets, which started out the day higher, are now struggling with that advance, right? They were, German GDP grew by 1.6% in the second quarter, just a bit ahead of the 1.5% estimate. Investors across Europe, though, like here in the U.S. and the rest of the world, are also staying focused on the crisis in Afghanistan, right? European countries also needing more time, they are telling everyone, to get their people out, and the Taliban have made it clear that the world has only 7 more days to do so, August 31st. Otherwise, they risk retaliation, and this is going to be an ongoing issue until, of course, it isn't, right? They've drawn a line in the sand, so let's see how the world reacts. At 6:45 a.m. this morning, European markets were all mixed, but trending just on either side of the unchanged line. Bitcoin this morning is trading right at 49,000, just a tad below 50 where it traded yesterday. Ethereum is trading at about 3,300, right about where it was trading yesterday, so there's no dramatic move in the crypto space. The S&Ps ended the day at 44.79 after testing as high as 44.89. 4,500 just on the horizon. Complacency is at an all-time high, and the Fed is not expected to start tapering, right? Announcing that yes, it is not implementing it just yet, right? We know what the plan is, but they're not going forward with it. Be careful. Don't get drawn in and let your guard down. We're at the end of August. Volumes tend to dry up, leaving moves more exacerbated, which is kind of what we saw yesterday, more than normal. And then we're into that September-October period, which is full of seasonal volatility, right? That doesn't mean panic. It just means keep your head clear. buying some downside protection is never a bad idea. Because my sense is if the change comes, it's going to come quickly. You're not going to be able to get a chance to. Remember, you can always you can always text the word invest to 21,000 on your cell phone. You'll get my digital business card. Feel free to download it. You can send me an email, a text message. You can call me. I'm always happy to engage and talk about the markets, about planning, about the thoughts, concerns, ideas, whatever you have. I'm always happy to talk about it. And you can follow me on Twitter at Kenny Polcari, and on Instagram, my handle is KennyP1961, which was my badge number when I was a member of the New York Stock Exchange. You can also, you obviously, if you're watching this, you can find my morning market commentary on my YouTube channel, Kenny Polcari Media, but you can also find it on Twitter because I post this I pin it to the top of my Twitter feed every morning anyway. So what are we having for dinner tonight? So I was just thinking about it. I wanted something simple yet delicious, right? So these simple baby back ribs, these pork back ribs, right? They're simple to make. They're really good. All you need is baby back ribs. You need some Sweet Baby Ray's barbecue sauce. You need some coleslaw. You need a cold beer. And you need a picnic table outside, right? So you want to bring a pot of slightly salted water to a boil. Add the ribs to the water. Return it to a boil. Once it boils, right, you're going to parboil them. Once it boils, remove the ribs and place them in a baking dish. Now add the Sweet Baby Ray's barbecue sauce all over the ribs and massage them all over, right? So the marinade is all over the ribs. Put them in your oven at 365 degrees and cover them tightly. Let them stay in there for a couple of hours because you want the steam to help cook them and make them, they'll fall off the bone. After about 2 hours, take them off, put them under the broiler. And I say this because, look, if you put them on, you can put them on the grill. I find that the grill tends to dry them out. So I just put them under the broiler, and I let the broiler do the work, right? You take the top off after they've cooked for 2.5 hours. You put them under the broiler, let them get crispy, turn them over, let them get crispy. Take them right out of the oven. You can slice them there and then serve them in a big, on a big family-style platter, and a big platter with, you can serve corn on the cob is a great vegetable to have with this. Certainly the coleslaw. You need a cold beer. You need a big picnic table out in your backyard. You need plenty of napkins because you really got to eat these with your hands, right? You can be fancy, try to do it with a fork and knife, but it's the summertime and the waning days of summer here. Just pick them up and you eat them with your hands. You eat all the meat off. They are so delicious. And if you do it right, the meat will fall off the bone. Not difficult, simple to make, no stress. I hope you enjoy it. In any event, the sun is now rising. The day's about to get started. Take good care, and I'll see you in the morning.